right, folks, go back here to the Diagnostic Trading Hour. We got the S&P is currently up 2.5 points. We have the Russell down a little over 5. Nasdaq currently up 10 points on the day. Dow up 33. We'll get on over at our metals markets. We got copper right now is down 1%. We got gold down 0.5%. Silver down 1% as well, about 1% on the day. Hopping on into the energy markets and seeing what we got going on. Over on oil, we are looking at a nice move down of $1.50 right now, with over over 1.5%. And we got natural gas moving big also, down 2.5% right now on the day. So there's some big moves right there in the energy sector. Looking at our ags, we got corn is up about 0.5%. It's only $1.50, but it's it's a smaller number there. We'll get on over at soybeans. We got soybeans down 9 points right now, so it's about a 1% move on soybeans. Pound dollar is down about 27 pips. We got euro dollar pretty flat on the day, up just a pip from settlement yesterday. We'll get on over at euro pound. Euro pound is up 24 pips. Dollar franc is up 1. Dollar yen is currently up 53. Euro yen is up 64 pips. Aussie yen's down 27. The Aussie dollar is down 56 pips. And dollar index currently just up a little bit, and bonds are heading on down at the moment. All right, so we had a lot of good activity going on last night. Let me go ahead and bring that up, and I'll show it to you. We'll look through the charts. But just looking at those 10-minute MVPs there, nice, clean. Not only do you have the long up there, later in the day, but right around 8 o'clock, between 8 and 9, we got a nice short going on down there on the euro dollar, and a really solid move. And we'll pick up where we're at right now here. I'll come back and do some market reviews for current market status, but just to show you, I want to get y'all starting to think about those nighttime trades, especially on Nadex. Very simple to do. Here's the pound dollar on 10-minute MVP going down, just coming off that settlement line, moving on down, hitting the 0.5 deviation level. Going on into dollar franc, we can see sort of the opposite going on. Got a big long right here, about 8:30. Give another little long, sort of went flat at that half deviation, at least going into 3 a.m. But got some nice trades on the U.S. yen. And pulling that one up, we got a nice little move there. It actually broke into the 0.5 onto 0.7, moving on to 1. Some nice, good movement last there with the U.S. yen going on. Aussie dollar had some spike strikers going on today. Look at all these. And so just a sell, just a perfect sell going right in the evening. So to try to highlight some of these evening trades. A lot of people don't even think about evening trades, or they think there's not enough or they're not there, and that's sort of what I'm trying to show you is the opposite. It's true. You can go and buy right there. You can sell right here. Write all these on the spike striker. Paul mentioned those on the contest there. He did really well. But so lots of trades that you can take advantage of, and this is just, notice how it's monitoring 5, 10, 15-minute spikes. Breaks above the high, we buy it in the money, and it goes up. And, basically we expect flat to, up or down, right? So here it goes in. We got a big volume spike. It's tracking all the different time frames. It's showing you the old ones that didn't hit, but the ones that did hit right here had a sell. It broke the low. That was the sell entry, and then it moved on down without me having to have 3 different charts up and all the volume. Makes it a lot easier. But those are great, simple trades, and those are just a lot of nighttime trades. Let me see if I can find this, but there's, there's so many different things you can trade in the evening over on Nadex. And I want to see if I have this little expiration calendar thing I made a while back. Maybe I can pull up for you and go into. And come on, my screen just give me a little trouble. Okay. So right on up here, what you can see is all these contracts that are traded at night. Now you got euro yen every hour, but you got Japan 225 going on right here, and they have those intradays that you can trade in the evening. You got all the other FX pairs. Okay, basically there's 5 FX pairs that have hourly expirations and 5 that have hourly expirations during the day, and then they have 6 daily expirations as well. So they do have a couple nighttime expirations. But this just lets you see all these expirations. I mean, it's expirations at 7, 8, 9, 10, 11, 12, 1, 2, 3, 4, 5, I mean, all the way down the list, all the way till 5 o'clock. So as a nighttime trader, I mean, I showed you, a handful of trades, pretty much on almost all of the FX pairs that trade in the evening that you could have traded. And even, the other ones you can still trade because, a lot of times I'll do these trades on these MVPs. If I'm going to I'll look at at 3 a.m. So, on a binary, or I'll look at, the spreads. You got, you can trade them from, 7 to 11, then 11 to 7, or 6 to 11, and then 11 to 7. So you can put those trades on. So there's some pretty cool, easy trades to do. You just got to sort of get used to it, get in there, start playing with it. But lots of good trades that you could cover during the evening hours. And if you don't know about Nadex, hop on over to tfnn.com. And then right here on the right side of your page today, go ahead and go to tfnn.com and click on Nadex. Once you clicked on Nadex, go ahead and click on Demo Trading Platform, and enter your whatever username you want. First name, last name, phone number, and email address, hit apply for demo. You'll be able to log in to the Nadex platform. Right over here, you'll just click your demo account. You'll log on in. And then you'll have $25,000 of funding money. You can go to your My Account. You can go to your settings. You can update your password with one that you'll remember. Put in the one they gave you in your email. Then put one in that you'll remember. And, there's a lot here. Here's the, FX binaries, all that stuff. Now, this can get really complex. Look at all these different expirations, okay? Tons of expirations. And it can be massively overwhelming. That's why I made the scanner. So you can go in, and you can also go over to tfnn.com. You can check out the scanner for free. And when you look at this, you can go, I want to look at euro dollar. And here's every expiration, but it's all on one page, one click. Notice here we have to go to view all of the, or dollar CAD, I guess in this case. To view all of these, we literally have to click down each and every one of these. So if I want to do that on dollar CAD, I just go over here, I go, I want to look at dollar CAD. And here's every single expiration. Which, may not sound like a big deal, but every time you make those clicks, that's more time. Now you go, well, that's still a lot of information to look through. Yeah, that's all the contracts being listed. So that's a lot of information to go through. That's definitely very true. Tons of information to look through right there. So how do we simplify that? Well, we can go in and go, what do I want? Maybe I want an in-the-money contract. And maybe I want one that expires within the next, 2 hours. Instantly, I drop all of these, because they had expired in greater than 2 hours. Instantly, I drop all the out-of-the-money contracts. That helps tremendously. Now, do I want a trade that has a profitability of only $6? No, maybe I want one that has at least, we'll say, 15. Okay, so we'll go over here, and what we'll do is we'll just say you got our min-max risk, okay? So I'll say maximum risk of $85, which would be minimum profit of 15. And there, now we've dropped out all the ones that have less than a $15 risk. We got the 2 PMs, we got the 3 PMs setting up right there. Maybe I got a buy signal on Spike Tracker or whatever. I go click buy. Now I just got my buys. And check this out. This is a really cool thing to see. You notice the I and the D? That's intraday and daily. So you can literally see right there if it's an intraday or daily contract, but here's the beautiful thing. It's in the exact same spot. All the 3 PMs are in one spot. Whenever you go to Friday, you're going to have intraday, daily, and weekly all in the same place versus what we were looking at before. You have to go over here, and if you want to look at all the ones that expire at 3 o'clock, you got 3 p.m. intradays, 3 p.m. dailies, and then on Friday, you also got your 3 p.m. weeklies. So you got to go to 3 screens, and you're probably going to be like, you know what, that's too much work. And, I'm just being real. We get lazy. And you're like, that's close enough. That's what I'm looking for. And you don't know that you didn't get the better strike. And it can make a massive difference. Sometimes you'll actually find, look at this. Here's a perfect example. Okay? We have 2 of them. It had to change price on me. Hold on here. Let's see if I can grab it. I want to see if I can grab it well. It's not the exact same. There we go. Grab it. Okay. So right here, what I want you to notice is how these are the exact same price. The intraday and daily for today at 3 o'clock are trading at the same price. Every once in a while, you'll see it move off by a tick or something like that, or a dollar. But look at the strikes. They're not the exact same. It's 1182 and 1180. Well, if I bought an 1182, because I was looking at the intraday 3 p.m., okay? And it expired at 1180 or 1181, or let's say it expired at 1181 or expired at 1182, I would lose all my money on that trade. Okay, so if it went down against me, if the market dropped a little bit and it went on down and it expired at 1181 or 1182, I lose. But if I would have bought the 1180 at the same price, then it would have expired at 1181, 1182. I would have been profitable. So for no more risk, for zero additional risk on the trade, and for 2 ticks more, which 1 tick, 1/10 of a tick can make all the difference on a binary, I don't plan on holding them to expiration, but sometimes they go. I'd probably say there's a good, you will have a percent will just go. They won't hit a profit target. And those 2 ticks could literally be a difference of $80 on just one contract. What if you're doing 10? That's $800. Okay? So that right there pays for itself. Using that, it's worth using the scanner. It's not a newbie tool. It is a newbie tool. It's not a pro trader tool. Okay? Newbies, more than anybody, need this because they need to know to check. But even a trader who's doing this every day, are you going to go in and go, okay, 3 o'clock. All right, and I want that one right there. Okay, is there a better one? We got 1180 at 80, 150. Switch on over 1182 at 81. Okay, so that's about 50 cents different. So your mind that's too much to handle. We'll talk more about why this is so important when we get back. All right, folks, we'll come on back here to the Diagnostic Trading Hour. And what we were going over was how using the platform, one of the many disadvantages, but you go back and forth on the expirations. And so you're trying, 3 o'clock versus, say, 3 o'clock, if you're trying to look at 3 o'clock. And it would be so easy not to even notice. And one, you'd have to be disciplined enough to always go back and forth. Your mind and eyes are going to have to be fast enough to calculate and look at everything. But the biggest thing is just one simple mistake could cost you, like I said, as little as $80. 10 contracts, 80. Do 100 contracts, you go from 1 at 80, 10 at 800. If you're doing 100 contracts, you're talking about $8,000. All because of a couple simple ticks in the strike. And you can get more room for this same risk to be profitable. There's no doubt that the 1180 has a higher probability of expiring in the money than the 1182. But just the way the market pricing works on intradays versus dailies, sometimes what you'll see that exact same risk setup. And what you really want to do is you want to be picking that one that has the higher probability. So if you can get a higher probability deeper in the money trade for less or the same risk, it's a no-brainer, okay? So I want that deeper in the money. Anyways, all right. So that's just one of the, as I'm going through things each day and I see something, I want to bring up those lessons, and I didn't even have that on my list today. But it's probably one of the most important things I can teach you when trading, and it's one of the many reasons why I made the scanner was to save me from little things like that. All right, let's check it out. We got, some, moves going on this morning. Going on in, we'll check it out. Here's the Russell, bit choppy going on, just across the board, and plenty of good P2 setups there, but pretty choppy. Gold had some decent moves happening, and we'll go ahead and pull that one up and look at it. It moved on up and then pulled on back down and gave some really nice shorts into the morning. So gold was really a pretty nice chart this morning. We'll get on over at Dow. Dow, along with the Russell, Pretty choppy on its move overall, and not quite hitting a deviation, and just Dow being the Dow. So we got the S&P had a nice deviation bounce, came on down, hit the 0.5, and just bounced right up into settlement. Russell doing the same thing right here. We can see it came on down. Russell had the biggest move down on a deviation move level. It actually did hit its deviation out of the 4 indices and bounced on back up. So, last night, what else do we had going on? Gold extended this big rebound. We talked about that from 2014. So China's getting back into play, so, getting off its break there. Asia, had a pretty hard time that affected oil. And let's bring up that oil chart. So we've been talking about oil off and on. I think everybody's been talking about oil off and on. And let's see, this will work. Have a dollar CAD chart up. Let's go ahead and hop into oil down here. Let's see here. Letting that get on up there and going. So oil, we were looking at $89 and talking about how that was a big, very important break-even level. That's something that Pesavento brought up. And we've been watching that level, and it keeps bouncing off. When it broke it, moved down, and it did. It moved down solid. And as big of a move as that is for today, that was the expected move by the market today. That was the deviation move by the market. We expected it to move that far, and it did. And it's sitting right at 87.34, which is exactly a -1 deviation move from the previous day's settlement. So I love the accuracy on that. That's like, hey, you know what? We're getting this big breakdown. How far of a break should we expect? If we break that 89 level, we've been expecting. If we really get a solid break of that 89, for it to move on down, well, it did start breaking it after the close of the pit yesterday. Where would the expectation be to go to? Be to go down to 1 deviation. And boom, it went right down to 1 deviation. Let's see, some other things we got going on. I'm just trying to, list through some of the things that I've been looking over. Let's see, the Australia job gains, they came in really positive. But were they really positive? Because the Aussie did not seem to buy it. We'll talk about that when we get back. All right, folks, we'll come back here at the Diagnostic Trading Hour. We're talking about oil and how it broke that 89 level, broke on down 87.34, and it could go a whole lot lower. I mean, potentially even down to 50, breaking that level. Obviously not today, but at a long-term time frame, it could easily pull back. And that sounds ridiculous, but I mean, just go back and look at a chart. Okay, we've seen it go down to 50. We've seen it go up to 150, okay? So, anyways, moving on down there. And on top of breaking that level, not only did that happen, and it's sort of funny, you read the news, and they're like, oh, it's all because of the oil inventory report, right? And, literally, there's a news, I look at these reports, and it blows me away. Let me see if I can bring one of these up, because it's sort of funny. Where did it go? Come on. Okay, yeah, right here on Market Watch, which I like Market Watch, but let's see if this will come up or not. I'm not sure if this is going to come up for me, but if it does, the story, yeah, oil futures add to losses after surprise supply increase, okay? Basically saying that the oil inventory report that came out, which was a surprise and was higher. The expectation was an increase by 2.1 million. It was an increase by 5. If we actually look at the actual oil inventory report here, we always look at the third paragraph, first 2 sentences, 5 million. Well, that's about the 2.1 they expected. And then it says that number is in the upper half of the average range for this time of year. So, yes, that was a surprise. But what time did that report come out? Let's see here, 10:30. Okay. So now let's go look at 10:30. Let's see how much did that report impact the further losses. Okay? And check this out. We got 10:30, so the market does a little pullback going into the news. Okay? It's right about here, and then it drops down. Okay, that seems like 40 cents. But is it 40 cents from the low of the day? Let's see what it is from the low of the day before that, today. Okay, so basically oil dropped about 20 cents from the oil inventory report from its low of the day. compared to how far was it down before that even happened. I mean, it makes for a great news story because it sounds right. Oil inventory should be crashing oil. Of course, by the time you read that news story, I think it was a little late. By the time you saw the oil inventory, it was a little late. We're going down here. How low is it before oil inventory even came down? We had a $2 drop since 2:30, or well, maybe not 2:30. Maybe I need to adjust that. But let's see, go over here, 2:30. There we go. Pretty close. So yeah, we had a $1.85. Okay, a $1.85 drop, basically since settlement yesterday from before the news. And let's see where we sitting at now since yesterday's drop. We're sitting right at, I got $1.67. We're actually a little higher than where we were before the news. Okay, so the oil inventory did not add to the sell-off. There's a little spike up, there was a little spike down, and then it popped right back up. Actually, the opposite of what you would expect to see on an oil inventory report, where inventory came in better than expected. You expect it to actually go down, right? More supply, lower price, okay? Because the supply goes up. But that wasn't really the case. So it popped up actually quite a bit. And anyways, I just want you to learn how to, I want to bring that up. Not to be like trash the news. As you know, I trade the news. But also, I don't trade the news usually very directionally. I try not to even take into account so much what really happened that was good or bad. I mean, I'll look at it. I mean, I'm like anybody else. But when I'm looking at this news, I'm going to look at expected ranges, expected movements. I'm going to think about where it ain't sitting at one deviation. Pops down, pops up. I mean, it's already moved its expected move. I'm going to look at things like, spikes going in and seeing what kind of trades I can find, and be as fast as I can on those. I'm going to look at expected movements, like I said, on the hour. If we go in and pull this off, let's look at just the expected move alone. All right, so let's pull that up. Expected movement and expected range here. There we go. And let's look at the expected range on oil and see, was it outside of the norm? Okay. We had one big outside the norm. That actually happened last night at about 10:30. And that was just basically the market just going there and boom, it just popped. It dropped big for that time of night. Usually, we're talking, a matter of a few ticks. The usual move on that during that hour is, 7 ticks? Okay. And what do we move? We moved at a maximum, usually it's 7 to 8 ticks, and it moved like 55. That was a big move. We had another big move, but it pulled back, okay, on back in the following hour. And then we had one other big move that happened earlier today. That wasn't even, that big of a move. It wasn't even during the release. Actually, the pullback was after the release, about an hour after the release. More than an hour after the release was actually a bigger move. The inventory report itself literally hit expectations to the tick. Okay? We had an expectation of a movement from high to low, right there, of 70 ticks. And, okay, not to the tick. I'm wrong. It moved 68 ticks. So within 2 ticks of our expectation, I had an expectation on my stats of 70 ticks of movement on oil inventory from high to low. And we got 68 ticks. So nothing abnormal there. A little bit of a breakout, like I said, on 2 out of the 24 hours of the day here that actually, exceeded and stayed outside that. Pretty dramatic amount. But it was not the oil inventory news that added to the losses. Okay? And so it's just always interesting when I see some of those articles and I'm looking through them. And some of them are right. But sometimes I do that Monday morning quarterbacking and they don't quite know to go look at a chart. So it's like somebody needs to, give them a little tutorial on, how to look at a chart. All right, so, but that's putting oil at, a 27-month low, I believe, and we got Asia shares are tumbling down. So, and we got Europe, has had some issues. There's all these global growth concerns going on right now. So we'll see how it's able to pull it off, but a lot of concerns happening. Even the Nikkei hit a 5-week low. We go over. Let's see if I have that one built in on here on this specific computer. See if it'll pull it up. I'm not sure if I have that data feed in here. I think I do. We'll find out in a second. Oh, I don't think it will because I think it's live only. Oh, there it goes. Okay, well, never mind. I got so many data feeds on so many different computers. Okay, so Nikkei's been tumbling down and had a little bit of a bounce lately, but overall has been really going down. It hit some new lows today. And it depends on which exactly one you're looking at. But anyways, there's just a lot happening. IMF is also downgrading fuel growth. So that's interesting that we see oil drop. But and then we got some other stuff going on. Let's go ahead and check out a couple other pairs. Let's check out pound dollar and see some rejection on price here going on. And pound dollar moves on up. And today it does not even, it goes up to about 6,100. So right over here we see it just bust 6,100 and pops right back down to 60.50. That's just a half deviation move down. So that's really not a surprise. But it goes up and it keeps bumping against that settlement and then pops on back down. We can see how it's done previously, but I mean, that's pretty much how it goes. But a nice move right there. And we still got plenty of movement left for a potential deviation move on the day. We haven't quite hit that. And we got about, 20 more ticks or so, 10 to 20 more ticks on pound dollar. Potential movement. Obviously, it's got to break through this 0.7 level. We just had a pretty high volume spike there on 6B. Come on in on the pound dollar. So we'll see if it has enough ump to keep going or if that just burned itself out. Often we see these volume spikes. We're going to see a reversal. So let's see if it can keep up that volume steam. It had high volume, low volume, high volume. We're in the low volume stack right now. We'll see if it does another high volume to keep on pushing on through. Let's see. Euro yen's been doing some impressive stuff overall lately. Let me pull up the euro yen. And looks like it's trying to, just push higher and higher. Let's see how much it's on its regular move there. It's sitting right at one deviation. And it had a little drop down yesterday, but it gained it right on back. Pretty much all of it. I mean, look at that. So you got a little cup and handle thing or whatever people call that going on out there. But anyway, so right back up to one deviation at the moment. And just sitting there waiting out. So good, nice move there on the euro yen. Let's see here. We got a euro pound moving on up. Let's see what's going on. And supposedly moving on up to several week highs right now. And we back out there. We can see a little bit of activity going on. It's definitely going up, up, up. So yeah, so we're getting some pretty good movement. And busting on up, working on 3-week highs here, right at the 78.99, 7,900 number. And that is a deviation move on the day. 0.932 is where we hit on that high. Let me zoom on back in there. And so right when we got up here, you can see the deviation market, 93% of a deviation. So just right off shy of one deviation move on the euro pound. But euro pound doing some pretty hefty climbing there. Let's see. What else do we have? Well, let's check out. We had the CAD, Iron Condor. We go back over to the dollar CAD. And from the news trade from yesterday, or this morning, I mean. And all right, where is, well, we had that one from yesterday. We had tonight. I'm trying to see what all we have on the list. That might be an old one I have in my notes. CAD, housing. Well, that was that was yesterday's. Okay, so looking at Wednesday, we got or maybe that was today. Get my dates right. There we go. Okay. Various reports. And the one to focus on was the CAD. Okay, so I was right on my notes. Dollar CAD over here, looking at 8 a.m. to 10 a.m. So we got an entry right here. We get in the trade at 8 o'clock. Okay, and we look for a lower spread and an upper spread where the combined maximum profits is no less than $20. And we take that to 10 a.m. It expires out. It moved 14. Not a massively profitable trade, but still within our expectations. And it did move, 14 ticks there from open to close, and from high to low, we got a little over 20 ticks. So, but we don't really worry about the high to low. We worry about from where we get in to where it goes up or where it goes down, because we're doing a neutral range-bound trade. So would have captured about a 25% return on that trade. If you able to get that, Phil. So another news trade in the bucket. Not too shabby. Let's see. I know we're about to add in earnings season stuff. I'm going to be going over that with you soon as well. And let me see what we got over here. Okay, so all right, we got tomorrow. Let's see if we have anything tomorrow that I want you to make. Okay, we do have a few Iron Condors for tomorrow, so I want to make sure that you have those on your list. Okay, let me back out of here, and we will bring these up for you. All right, so got that right there. Again, I want to make sure you do have these Iron Condors on your list before we wrap up. Going to look at tomorrow. We got several things going on, and let's walk through it. Okay, we got the official bank rate coming on out of Britain. That's their Fed funds rate, and that's from 7 a.m. to, or it's going to be released at 7 a.m. So we're looking at a 6 a.m. to 8 a.m. expiration. We're for a $35 minimum profit. Usually they'll inflate it pretty heavily. Usually we don't see any kind of change, and it pops and then it drops right back to where it was before. So that's what we're looking for. Again, the one downside, we don't have the euro-dollar interest rate announcement and the euro-dollar press conference to stun it a little bit. So just be aware of that. But again, entering at 6 for 8 a.m. expiration for $35 minimum profit on the Iron Condor for tomorrow morning. We're also going to have U.S. unemployment claims. So we're going to look for volume spike trades on that. We're going to have natural gas inventory. We're looking for volume spike claims trades on that. Going into the Aussie dollar home loans, that's going to be coming out. And we're looking at a 6 p.m. entry for an 11 p.m. expiration for a $30 minimum profit on that trade. And so that gives you a nice evening trade. And again, that's doing an Iron Condor buying the lower spread, selling the upper spread. And we got a pound-dollar trade balance report. We'll talk about that one when we get back right after this break. All right, folks, we're going back here to the Diagnostic Trading Hour. And we're going through the news trades. We just talked about the pound official. We talked about Aussie dollar home loans. And, going into, let's say, also tonight, we have a straddle report on the Aussie dollar. So on the Aussie dollar employment change. So right here, we're looking at getting in 7 to 9. I don't know why I have 6 to 9. So still showing. And let me update that. Okay. Okay, so what we're looking at on that one is a 6 to 8. Or so that would be a 9 to 11, right? Let's say 7 to 9. There we go. 7 to 9. Or a 6 to 11. Or a 7 to 11. And so the reason I'm saying that is the spreads last. Basically, there's ones that open at 6 and go to 11. That's 5 hours. All the other ones are only 2 hours. And the trade comes out at 8:30. So you also could look at a 8 to 10. So all those are the combinations, surrounding it, okay? So 8 to 10, 7 to 9, 6 to 11 would be the three possible entry and expiration times. Why would I give you so many? I expect that move to happen in the first 15 minutes, okay? But you may be able to go in and look at the prices at different times to see if you can get that price. I mean, you may have to get in at 8 o'clock. You could even do, an 8 to 9. So you just want to make sure that you are staying within that $35, maximum risk requirement. Being a straddle, it's a little bit different. Now, ideally, more time after expiration is better so long as within the maximum risk. Okay? So, anyway, so we got that trade for tonight. We got the two we went over for tomorrow. We have one more for tomorrow night. We got the pound-dollar trade balance report, usually a non-event, entering at 11 o'clock p.m. Eastern Time for a 7 a.m. expiration. And looking for a $30 minimum profit Iron Condor on Nadex. And that right there will wrap up our main news trades for the week. We'll have one more trade. We're going to go in. We'll have this CAT employment change report for the end of the week. Just to let you know what that one is. But that's 8 to 10 a.m. on Friday. And we're looking for a $35 straddle, maximum risk straddle. That's where we're buying the upper spread and selling the lower spread. Okay? So buying the upper spread, selling the lower spread. On that specific trade, anytime it's a straddle. A straddle, again, using the spread strangles are an option that is using the binaries, but, I've talked about, differences on this before, and the problem is on the binaries, if you don't hit your profit, you lose everything. On the straddles, you can still, easily break even or, have less of a drawdown than full loss, and that, of course, helps your stats overall. Let's see, what else do we have going on? That's all of our earnings. Earnings are going to be coming out next week. I'll be listing those off for you. Hopefully I'll have that list updated and accurate by tomorrow. Earnings dates move around and fluctuate. So I have to go in and, double, triple, quadruple check it. And once I get that all up and running, we'll talk about some, earnings trades, how they're going to impact the market. Obviously, a big stock like a Google can definitely have an impact on, the NASDAQ, right? So there's other stocks that have a similar impact. We'll have to start digging into those more. But they may give us some opportunities to trade on Nadex, okay? And we'll be looking through these each day next week on the show. All right, y'all have a great day. I'll see you tomorrow on the Diagnostic Trading Hour.